Every quarter, I make an update on different portfolios and different platforms which I use for investing. And in the third quarter of 2021, I missed the update for my portfolio on Vanguard, and I'm making it only now because I thought it wasn't very interesting and there weren't many changes, so it wasn't too exciting to make a video about. And I'm making it now because I think it is incredible the results that it shows, and also I'm planning to make some changes to my portfolio. And the last reason of why I'm making this video is because I actually need some advice from you guys. So if you can give me any, please leave them in the comments below this video. So if you want to know what changes I'm going to make and if you want to see my results, then keep watching this video. Hello guys, and welcome back to my channel. My name is Anastasia. On this channel I talk about investing, and especially investing for beginners. Less than a year ago, I created a profile on Vanguard. I have my ISA account there. So ISA is a tax-efficient investing account that you can open if you are a UK resident. And generally, Vanguard is used for investing into different funds, and this is exactly what I'm doing. If you haven't watched my previous updates and videos about my portfolio on Vanguard, then to just quickly make a general overview of what I'm doing there is I started by investing into different funds from different geographical locations just to cover the whole world and to minimize my risks. Then I realized that it makes sense to invest into one of the one decision funds. I don't want to save money for pension because in general I don't believe in pension, and I don't see the point in saving my money that I would be able to use only in so many years. So instead I opened a life strategy fund. A life strategy fund is very similar to a pension fund, but the proportion between bonds and shares doesn't get rebalanced automatically. So I invested into the life strategy fund that consists of 80% equity, so different funds that include different stocks and shares, and 20% bonds. And bonds are very low risk asset, and the idea is the closer you get to your retirement age, the higher the proportion of the bonds should be in your portfolio. So because I thought that I will be able to rebalance it myself whenever I need it, I decided to invest into life strategy instead of pension funds. As for the other funds that I had invested in from the very beginning, I left them without any changes. So I still have the dividend portfolio with the dividends that get reinvested, so I don't receive any dividends in cash. I invest into S&P 500, and S&P 500 is the fund where I invest into 500 biggest companies of the US, and I chose very random funds, for example FTSE 100 or Japanese FTSE, which has a very similar concept to S&P 500, but it invests into 100 biggest companies in different countries, such as Great Britain for FTSE 100 and obviously Japanese companies for the Japanese FTSE. And all of my funds that I've invested in, they all show good results. But what many people said in their comments, and I agree with these comments to an extent, is that it doesn't make sense to hold these individual funds because I actually hold them through investing into the life strategy fund. So the life strategy fund is, if it makes sense, a fund which consists of many funds. And inside this big fund, which is called life strategy, I have different funds that invest into companies all over the planet. So I am already as diversified as I can, and only because I want to concentrate more on the American economy, on the economy of the US. That's why on top of the life strategy fund, I also want to invest into S&P 500. But holding the other funds doesn't make sense. So the decision that I made is I'm going to get rid of those funds. I didn't do it before because the money that I invested into them, they are not big money, so they are not making a big change on the scale of my whole investment portfolio. But as the time goes, I come to realizing that my whole portfolio consists of these very little investments that I made over the time. And when the asset was relatively risky, or I didn't realize much what I was doing, I invested very little money into it. I did it with Vanguard, and you will see the actual sums that I invested into it once I show you my portfolio. I did it on eToro, I did it on Trading 212 by investing into different penny stocks. stocks. And when I look at them individually, I see, well, it's only $100, and if I withdraw this $100 with a loss, it will not make a big difference, so I might as well just wait for this asset to grow in price, and then I will withdraw the money whenever I need it. But the thing is, which is very important and everyone should remember, is that our portfolio consists of these little investments. Individually, maybe they don't make a big difference, but all together, it's actually quite a big sum. And on top of that, if I don't see the point in holding the shares of a certain company or the certain fund, I should have confidence in myself to make the decision and withdraw these funds, to be able to reinvest these funds into something that will bring me higher returns. And as beginner investors, I think people have very little confidence, but they do feel more adventurous. But as the time goes, like in my case, I think people get more confident about their decisions and less adventurous because they've already learned on their mistakes that they've made in the past. So anyway, this is how it happened in my life, and now I feel ready to actually take these decisions, to withdraw the money, sell out these funds, and concentrate only on the funds that I believe in and that bring me the good returns. So now you know what I'm going to do. Let's look inside my portfolio and hopefully you will understand better what I mean by it. Okay, so this is how my stocks and shares ISA looks right now on Vanguard. And if you look at my total return, personal rate of return, it is nearly 32%, and it is in less than 1 year. My strategy still stays the same. I invest every month into Life Strategy Fund and every week or almost every week into S&P 500. The only reason of why I might not invest every single week is because sometimes I forget. I still have some available cash that I'm planning to use on S&P 500, and let's have a closer look at my investments. So Life Strategy Fund, as I said, with 80% equity, takes 16.6% of my total portfolio on Vanguard. I invested £700 into it. I started investing into this fund somewhere this summer, I think, maybe spring, and it so far made me £41. Then this FTSE 100, the one that I was talking about, I have only 0.72% in it, and I've invested only £29, and it has already brought me £2.8 return on investment. So you see what I mean? It is only £30. £30 is less than $50. There is not a big difference whether I decide to sell this fund or I decide to keep it. But on the other hand, it is just a waste of time and money, because by investing into the Life Strategy Fund, I already have invested into the same companies that are included into FTSE 100. So my portfolio essentially is over diversified. The next fund that I have is FTSE Japan, and I invested £79 into it, and so far it made me £3. So my current weight of this fund is only 1.8% of my total portfolio. S&P 500 is the one that I'm concentrating on the most, takes 74.3% of my total portfolio. I invested £2,700 into it, and it made me £523 return. You have to realize that I've invested into FTSE Japan and FTSE UK only once. So I bought each of these funds only once a long time ago. But S&P 500 I'm buying regularly. I'm using a dollar cost averaging strategy here, so the return is absolutely great. Okay, and my last fund is a global short-term corporate bond index fund hedged accumulation, and this one takes only 2.28% of my total portfolio. I have £100 invested into it, and it has made me so far 20 cents or 20 pence. Well, I also have some cash, and cash is 4%. It's relatively high, but it's because I am planning to invest this money every week for the next 4 weeks into S&P 500. So what I'm going to do now is I'm going to get rid of the Global Short-Term Corporate Bond Index Fund. I'm going to get rid of the Japanese fund and FTSE 100 UK. This is where I don't mind hearing the opinion opinion of other people. What do you think I should do? Should I just get rid of it, or shall I keep it? It is only £30 and I kind of fighting with myself, because even though I think it's a waste of time and money, I don't actually spend any time on it. It's just there. And if I withdraw this money, I will end up investing it into S&P 500 anyway. So let me know what you think, what I should do with this particular fund. Okay, so let's look at how you sell this fund whilst we're here anyway. So first of all, I'm going to get rid of Global Short-Term Corporate Fund. So I press on the 3 buttons and then sell, and then I'm going to leave it as cash, and then I click next. What would you like to sell, pounds or units? Or you have an option, sell all. So this is what I'm clicking here. I click next and I submit. And it's done. And then I have a pending sell order. And now if I go back to my account, I open investments, I will still see it there, but in my next profile update, it will not be there anymore. So if you want to see the result of me making these changes to my portfolio and what results I will achieve in the 4th quarter of 2021, if you want to see my next update, you'd have to subscribe to my channel. Another idea I have, and something I'm not sure what I should do with, is changing the life strategy fund from 80% equity to 100% equity. Historically, 100% equity has performed better over a longer period of time, and since my idea and my goal of investing into Vanguard is to keep this money there without withdrawing it and taking it out somewhere, well, much later, in 20-30 years, let's say, is it worth taking a little bit of a higher risk by investing into 100% equity? The problem that I have here is that anywhere over all the platforms that I'm using and all the investments that I make, I don't have any money invested into bonds. So from this point of view, it is nice for me to have the 80% life strategy fund, because it gives me the exposure of at least 20% bonds in my total portfolio, because I don't invest only on Vanguard. And if I change this fund to 100% equity, then I will lose even this very small exposure to bonds completely, and I will not have any bonds at all. Since we don't know what's going to happen in the future, nearest future, whether another crisis is coming or the stock market is in the bubble, many people have different guesses, but no one knows for sure. And of course, I don't know either. I have this dilemma and I don't know what to do. For now, I'm going to keep 80%, but on the other hand, if I'm going to keep that money there for a long period of time, why not just take a bit more of a riskier approach and invest into 100% equity fund? Let me know, guys, what you think. I would really appreciate if you share your thoughts with me in the comments under this video. Thank you so much for watching this video, and thank you so much for your time today. I hope to see you soon in my next videos. Bye bye.